This is just a quick one because I just want to show a little simple strategy someone can use, especially when we are talking about volume profile in trading. So, profile is one of the introduction to market mechanics, and what drives the markets is the buyers and sellers. So, first of all, when you're talking about the volume profile, or what you got to check is first, you're gonna check your supply and demand zone, right? And then you understand your supply and demand zone. Then you now know what we call the entries and exits using supply and demand. So after that, you now prospect your demand and zone plus your volume profile to avoid fake breakouts and how to avoid them, and then difference between volume profile. So using volume profile for trade, you need to know how to spot liquidity zones, volume gaps, and what's the signal confluence and of supply and demand zones. So strategy building and trade setups, and that's it. So firstly, you take out your support zone. You need to mark out your support zone, but you just take a tool and then you mark out your recently support zone. So we've marked out our support zone, and then we're going to switch back to the 30-minute time frame. So on the 30-minute time frame, you're going to understand what the market was talking about, what the market was doing. So firstly, you know that the market was in a bearish trend. So and then we have a break of structure around the zone. So you first of all take out your demand zone, and then you spot out your liquidity zone. So from this zone here to spot out liquidity because it has been on a straight line, and you take out this other zone too. So after you've done this, you not go back to your settings. You turn on session breaks, and that's okay. So now you're gonna see those grid lines. So you come over to your tools and go and pick up fixed range volume profile. Then you insert it between the previous market sessions. So this was a previous session. Now let me zoom in well. You will see a thick line, and this thick line will represent the high POI. So this was where institution place big orders. So you're gonna mark out those zone, and this is gonna be like your stop loss. So your stop loss is gonna come over this area of concentration. So what you're looking for now, sorry, I was talking about stop loss. That's not what I wanted to talk about. You come over here after you've spot out that zone. That is your zone of confluence. That's where you're going to take your trade from. So whatever the market decides at this level is what you are going to be working with. So now you've seen it that there was a breakout from the bearish flag, and then it pushed the upside during the CPI on Friday. So that's a little explanation of a volume profile. You can apply this in other charts, and you have same results. So that's it. So whatever the market is talking about around this zone is what you are going to be concentrating with. So wherever you're having your zone, that is where you'll be taking your trade from. So if it's on the buy side, you're going to be taking your trade, and your stop loss will be at the low range and volume profile around this level. So that will be your stop loss, and your take profits should be around this zone. So you're gonna be like a 1:1. Gonna be like a 1:1 risk to reward ratio if you're using the volume profile, except unnecessary you're looking for higher RRLs depending on your strategy. So that's how you're going to work out those levels.